Our lunch this afternoon is Brian Kantor, the Chief Economist at Investec. Brian, thanks very much for coming in. The numbers, I can see you poring over them at the moment. There's a discrepancy between the value of sales from the mining industry in South Africa over the last period as opposed to production. What do you make of it?
Not discrepancy. The differences. There's production and there's sales.
Yeah.
And now sales are production times price. So there are two elements here. There's the production side and the prices.
Yeah, it says here, seasonally adjusted mining production increased by 1.3% for the 3 months ended
That's
May
right,
2012 compared. So I mean, it's a step in the right direction because it's been on a downward slide recently.
Well, no, it's been on a long downward slide, but April seemed to have been a very poor month for production, and then there's a nice recovery of about 6.5% in the month of May. So clearly they were getting more stuff out the ground, but the prices were probably down. Though we don't have sales for May. We only have sales up to April, so we don't have a full picture for May. But for the industry, it's clearly production and prices that matter, and prices are under pressure or have been under pressure. Now we've seen a turnaround in the price of oil. Whether that's particular to oil, I don't know. Probably not. These tend to run together. Over the long run, this is worth noting that production levels are at just under 93% of 2005 levels. So the industry has been shrinking in volume terms, but doing very well on the price front in recent years. Prices have been, or revenues have been rising very strongly, therefore. Very strongly until this year, when revenues actually flat on a year ago.
Within the complex, what has performed badly? I mean, we know about the disastrous situation prevailing with regards platinum group metals, Brian. Has that been the one that's really stood out for you, or is there anything else from these numbers?
Yes, well, platinum production on a year view is certainly under threat or under pressure, but it wasn't actually a bad month for platinum either. It's interesting to see the different, I think, the different contributions made by the different metals to the total revenues. In fact, coal is the biggest contributor, 24.5% of sales, or coal sales.
So that's our major mineral export now, or rather mining export.
In revenue terms.
Yes.
In volume terms, platinum is considered to be bigger. But platinum revenues, so coal 24.6 over the last... between November and January, this is the latest numbers I seem to have given, platinum's 20.3 billion and gold about the same as platinum, 20.3 billion. And iron ore coming up quite strongly, 16.4. So those are the big fours. The others, copper and nickel and manganese and all that, don't really contribute a great deal.
It says here the actual value of mineral sales at current prices for the 3 months ended April 2012 increased by 2.8% compared with the 3 months ended April 2011. That's a year on year. Major contributors to the increase were gold, contributing 5 percentage points to 4.344 million, and then after that coal at 3.114 million. Brian, of course we can't control what happens to the gold price overseas or the iron ore price or whatever price it is, but we can do something about the way we conduct ourselves and the way we extract as a country and as an industry. So let's get onto that now, because that is in our own hands. What is your impression of the way that mining is behaving and being forced to behave by various extraneous factors?
Yes. Well, I think a large part of the responsibility for failing to increase production in what were very profitable times must lie with policy. I think it was unfortunate that South Africa embarked on a whole new regulatory regime just at the time when the prices were taking off. And that added uncertainty. And these changes in regulatory regimes bring uncertainty. So it was, and there's been particular uncertainty about mining licensing and royalties and taxes, all of the kind to discourage new investment. So, though if you turn to the platinum industry, you would say that most of their problems are really of an engineering nature.
Yes.
They've had very high prices by the standards of the past, but these prices no longer produce platinum at a at a profit.
Isn't it extraordinary to suggest that with platinum at $1,414 an ounce?
Yes.
I can remember looking at platinum, crikey, it was about a dozen years ago, it was 400, 500.
Yes.
And that was considered to be a highly profitable price then.
Yes, that is the irony of it all. So the plans to expand platinum production years ago were taken, I think, on a reasonably optimistic view of the platinum price at the time, about $400. So now we're $1,500, but many mines are unprofitable at this rate because it's deep level mining. It's expensive and it's dangerous, and there's another one of those regulations which I see is under review at the moment. When you have an accident, which is inevitable in mining,
yes,
they close down the mines.
Section 54, yeah. I mean, you get accidents in all sorts of industries. Indeed. In construction, does the construction industry conduct itself, and does it have its own Section 54? I don't think so. No,
it sounds a bit, when we have a road accident, we don't close down the roads. I mean, these are the risks that I think people willingly take in the industry. There's no getting away from it. Mining provides a good living for many, but it's always a dangerous occupation.
Yes.
And it's particularly dangerous when you go down deep. And the best will in the world, and I think even the best safety procedures, people may criticize what current practice, you are going to get accidents.
Yeah.
So I think that's a price South Africa really, and South Africans and miners in particular, will have to pay, and indeed will pay for the jobs. So there are trade-offs here, as always. There's no absolute level of safety that you could avoid any accident or even any fatality.
No, you can't. It's a tragedy, but as you say, it's an unwanted tragedy, but part of the business. Just quickly before we close this, Brian, looking at the talk around state involvement in mining, some people calling for full-blown nationalisation.
Yes.
Please, from my point of view, don't let that happen. But do you think there's a role for the state, a more proactive role by the state?
Well, the state does have a role. It collects taxes. It shares in the profits. It shares in the income of the miners if they're above the sort of tax income threshold. So the state is very much a partner. I think the pressure for nationalisation comes from the unions. It's a nice soft option to work for a nationalised industry. Why? Because the taxpayer subsidises your business.
If you make a loss,
you don't lose your job when in fact production is no longer profitable. Yeah. That's what happened. So. As you remember, back in England in the 1970s, before Mrs. Thatcher came along, the soft options were in coal mining and iron ore and in the printing industry.
Yes, I remember Arthur Scargill very well, and all those spats he had with the Tories. We'll have to leave it there, Brian. Thanks so much for coming in this morning. That's Brian Kantor, Chief Economist at Investec.